Welcome to Business Nigeria. I'm Yemisi Landre Idowu. The growing issue of unclaimed dividends continues to raise concerns in many quarters, including among shareholders, groups and associations, the regulator and the government. The Security and Exchange Commission in 2016 introduced the e-dividend portal in collaboration with Nigeria Interbank Settlement System in a bid to solve the problem of rising unclaimed dividends, which have accumulated to over 90 billion naira. Well, these dividends are owned mostly by small investors who entered the market during the IPO boom period and lost a lot in the subsequent market crash. Claiming these dividends was quite difficult in the past, as a shareholder had to own current accounts and specialized savings accounts, creating a barrier to claims. All right, let's discuss this further, and joining me in the studio to do that is market analyst Mokhtar Mohammed. Thank you for your time, Mokhtar. Yes, let's begin this way. What do you think would have led to this non-interest by investors in claiming their dividends?
Well, you won't say there's non-interest. Yeah, we could say non-interest in the sense that most of the investors that were not claiming their dividend feel they got weary of the market, they were no more satisfied. They went there thinking they could get capital appreciation, but unfortunately they were not getting the capital appreciation, so they didn't think, and some of the dividend they felt was too small compared to what they invested in. That is one. Then two, secondly, some of them at that time used different addresses. Sometimes you take it to this address, they are no more there, and there's no way to follow them up. Then at that time also you need to know, at that time there was no type of savings account that was accepted to collect dividend, and so those could have been most of the challenges that they had, and most Nigerians were not interested in e-dividend because they were not too sure. They were skeptical about the procedure, thinking, look, sometimes this brokerage registrar will say they've sent you your money, you will not see it, so you have to go to them. So there was a type of people were not so confident about it. I think that was what mostly was responsible for the challenge of claiming of this.
Okay, so why should regulators worry about this, really?
Well, they should worry about it because there's not an enabling law that allows some of this money to go back to the system, and so those money were just hanging somewhere up to like 90 billion, like you mentioned in your introduction. Yeah. So they were a bit worried, and again, that does not give confidence to the market, and so a lot of issues was there. And then you have to look at sometime again, when you go to claim this dividend for the registrar, after 6 months, they ask you for your signature specimen. And most of them, their signature specimen will not be found there, so they will have to go to the bank to get e-dividend, for them to get account clearance to be able to claim those dividends. By the time they bring this signature specimen to the bank, I mean, some of them didn't have current account, so they have to go to the bank. The bank will tell them to open current account before they will be able to have signature specimen to take to the registrar. So most of us, they just go worry and they ask you, so how much was this money compared to how much I've invested in? So all those were partly what caused this type of situation that we saw in the market. Okay,
so paperwork we know has been eliminated, giving rise to the e-dividend device. Now, what has the regulators done to ensure that this e-dividend can be well embraced?
Like you said in your introduction also, you see they are working hand in hand with the bank. Sometimes you can go to the bank, fill your e-mandate form and submit it to the bank, and the bank will take it to the various registrar. SEC also have come up with a platform whereby investors can put their names, and once you put your name, it appears where you have dividend, the houses that you have dividend, then you can go and claim those dividends, and made it mandatory that by 2016, by June this year, there will not be any issuing of paper dividend to any investor. So investors are forced to be compliant that most everybody must be on the e-dividend platform. And again, the central bank also have made it easy also that even if you have a savings account, also you can pay in check, you can use that for e-dividend platform. So I think they've done very well now.
Okay, so in your assessment, I'm sure you've worked with many of these investors and you've been in the market for a while now. Has there been, what's your assessment generally? That's what I think
the assessment has been good. Some investors don't even know that they had dividend. They just saw the mail comes to them and they say, oh, I didn't even know. So some of them are working out, sending it. But it's a process because the registrar also must be sure that you actually own those dividends. So they'll still ask for your signature specimen. And so if you don't have that signature specimen, they tell you to go to your bank to get a signature specimen. So once you bring that signature specimen to them from your bank, then you're on the in-dividend platform. And that makes it easy. I mean, you don't have to worry about going to collect your dividend for people. And again, the good thing about it is that SEC have made it mandatory to the registrar that 24 hours after you declare, I mean, after your 24 hours after your day of payment, all these investors must be credited with their dividend. Otherwise, the registrars will be sanctioned.
Okay, but is this the best practice? I mean, how do other markets handle issues of unclaimed dividends?
I think when it comes to unclaimed dividends, now there's a legislation aspect that have to go and with it. And sometimes the legislation we have about unclaimed dividend has been, for me, it's oscillate, because sometimes they tell some people that their parents have this dividend. Maybe your parents passed on like 10, 15, 16 years ago. After 10 years and they didn't claim that dividend, you have to go back to the company, not even to the registrar, to begin to write to claim
back into the company.
So, and I think that's an area they have to look into to make sure that this remains with the registrar, especially with the Security and Exchange Commission, so that they can be custodians, so that when these people come and do all the paperwork and they're satisfied with it, they will be able to claim their dividend. But a situation whereby the investors after 10 years cannot claim their dividend again, because if you have not claimed it for a while, then they now pass it back to the company, and so you have to go back to the company to begin to ask for your dividend. Well, and some of these companies do not even have a shareholders relation department for you to even liaise with them on how to claim your dividend.
Okay, that takes me to the issue of demutualization at the Nigerian stock market. Does it have any form of linkage with this? I mean, because I know that exercise has been in the limbo, if I would use that word. What is really happening in that area?
I don't think it's in the limbo. I think this has to do with the Nigerian Stock Exchange. They are trying to make sure that they get it right, they get their act together, so that when this thing comes up into every challenges that will have to be associated with it will be sorted out. I think they are working on it, and I believe strongly that before the end of this year, that will come into effect. It's not that it has not come into effect, because now they pay, most shareholders are bringing out their share certificate for them to be demobilized.
Okay, so what if eventually happens? What effect? I mean, there must be a very strong effect.
It gives credibility to the market. Okay. It gives credibility to the market, especially in terms of investors. You can buy and sell your shares with immediate effect. And again, SEC has also worked with the Nigerian Stock Exchange, whereby you can even have settlement directly into your current account, even when you deal with the brokerage firm. You know, before it used to be when you sell from the brokerage firm, you have to go to the brokerage firm to collect check and pay into your account. Sometimes it takes time. Now, check and mandated the brokerage firm that within 3 days, clearing the normal speculated trade clearing days, these shares hit the investor's account. It no more goes into the stockbroker's account, broking account. But again, that all depends on investors that want to take this platform. Some investors still believe that they want to plunk the money back to the market. So SEC asks them to fill a form whereby you exempt yourself from there. And then again, they're trying to minimize a situation whereby investors are not able to recover their money, saying that the stockbroker did not pay them their money after they sold their money. They've done a lot, and also now it's easier for you to follow your share, because you have to have alert on your system, on your phone. When they buy, they tell you how much. Those days, the stockbroker tells you how much he bought this share. But now with the alert system, it tells you how much you bought the share, and even when he sold, it tells you how much he sold. And sometimes, again, investors have said, I didn't tell them to sell, and because the alert system is proper, they notify the regulatory.
All right, so it's more of a transparent system now that we have at the Nigerian Stock Exchange. All right, let's link this to foreign investment in the market, and let's take a moment. Let me take the story now. Africa's economy is growing rapidly, and Nigeria occupies a key place in this. It will not be out of place to say that Nigeria is a strategic market for all manner of foreign investment. Capital importation represents the total value of foreign direct and portfolio investment into Nigeria in any given period. And that is related with the latest data from the National Bureau of Statistics, which shows that Nigeria's capital importation in first quarter of 2017 was estimated at $908.27 million. Well, this represents an increase of 27.75% in relation to the second quarter of 2016, where capital importation stood at $0.710 million. But in the third quarter of 2016, capital importation was $1.8 billion, and then there was a decline of 15% in fourth quarter, where it stood at $1.5 billion. Well, it further declined by 41.36% in the first quarter of 2017. Now, the third quarter of 2016 saw the highest level of capital importation for the year at $1.8 billion, while the first quarter 2016 witnessed the lowest of level of capital importation at $0.71 million. Now, Nigeria imported the most foreign capital from the United Kingdom. That's just for us to know in the fourth quarter. But we'll talk more about this, especially in relation with the capital market after the break. Do stay with us on Business Nigeria. You're watching Business Nigeria, and we're still looking at foreign investment in Nigeria on the African continent. And I've been speaking with Mukhtar Mohammed, market analyst. Yeah, we've been talking about the capital market. Now we're looking at it with focus, especially on foreign direct investments into the Nigerian capital market. But what do you have noticed that Nigeria imported the most foreign capital from the United Kingdom in the fourth quarter of 2016, followed closely by the Netherlands and the United States. Now, let's look at the capital market. So far, in your own assessment, what is foreign direct investment like in the capital market at the moment?
Well, at the moment, it's a little bit high compared to what it was in first quarter, second quarter, because the foreign investors were skeptical mostly when it came to this currency issue. Adequately pricing of the Naira at that time, then the two-way exchange system, and then the delisting of Nigeria from the JP Morgan indices also did not help matters. So the investors were actually not coming to the market because they saw the exchange rate comparable, the parallel exchange rate and the exchange rate they have to be forced to enter the market was very wide. So most investors, and again also the repatriation of their fund also was not forthcoming. So they stayed in the fence because some of them that were already there trying to repatriate their fund was an issue. But of recent, after the CBN came up with their new currency policy, whereby they not allow investors to have a special platform, whereby their own they can price in their own at a different price depending on the market scenario, and also they were able to repatriate their fund. So the confidence started coming in, and that is what is playing out in the market at the moment. Because foreign investors are beginning to see confidence, are beginning to see the two-way exchange system, a special platform whereby foreign investors that come to the market, instead of the normal interbank rate of about 350, they are allowed to change between 380, 400. So
okay, but we do know that the effect of FDIs cannot be overstated in any economy, and of course the Nigerian capital market. But aren't we weary of the times where we have this global crash?
Yeah, see,
because I do know we had such an event in 2008 thereabout. Aren't we weary of such times?
We are very worried, mostly the players of the capital market. And it's unfortunate that Nigerians don't see the capital market as a platform whereby they can grow their wealth. Nigerians don't see the capital market as a platform whereby they can begin to increase their earnings, begin to see it as a platform for retirement purposes. Seems to believe in our capital market more than the Nigerians. So we have a challenge there. And also that was due to the crash that happened in 2008. So the foreigners are actually taking opportunity of the low valuation of our strong companies, especially companies that have strong fundamentals. Before the beginning of this year, some of the companies, especially the banking sector, was trading at the all-time low. And up until the foreign investors begin to come into the market, now you could see that open event. Some of them have grown by 60-something, some of them have even grown by 100%. But now the challenge is that it's the foreigners that are even taking advantage of this, and not the Nigerians. So the Nigerians are going to come. The only time the Nigerians get interested in the stock market is when they begin to see that there's a capital appreciation and every noise about
when
the
there
stock
is a
market.
boom.
When there's a boom, so Nigerians don't take a position when there's most of the beer in the market. And actually, you don't technically you don't come to the market when there is a boom. You come to the market when the market is down. Then you get strong fundamental. It's
a long-term investment. All right, very briefly now, very briefly, and probably in one sentence, what's the ratio FDI and local investment?
As it stands now, between 60 to 40%. 60 to
40%. All right, thank you very much for your time. That's still very okay as we have it. Maybe later we could have a better one. Maybe the local market will take over.
But I think if the pension fund administrators are able to come into the market like they are planning to come, then we'll see that shift.
All right, then market analyst Mukhtar Mohammed, thank you for your time on Business Nigeria. Between 2001 and 2017, the growth of telecoms consumers was very tremendous, and this growth no doubt shaped the Nigerian telecoms industry, which has since been globally adjudged as the fastest growing telecoms market in Africa and the world. The continuous rise in telecoms consumer growth did not only boast the financial strength of telecom service providers and telecoms contribution to GDP, it also spurred telecoms operators to develop value-added services that enhanced consumer experiences. The Executive Vice Chairman, Nigeria Communications Commission, Professor Umaru Dambata, confirmed that the Nigerian telecommunications sector has so far contributed about 15 trillion naira to the Nigerian economy since the liberation of the sector and inception of digital mobile communications nearly 17 years now. It has also contributed about 9% to GDP in the first quarter of 2017. Well, this he attributes to sound regulation, provision of playing field for all players, which has continued to attract both local and foreign investment. But the question is, can telecommunication become the new oil in Nigeria? We have standing by via Skype to talk me on that, a technology and telecommunications expert, Oluseyi Soyode Johnson. Thank you for your time, Oluseyi.
Hi, how are you doing?
Very well, thank you. Now, let me start with that very last statement. Can telecoms take over oil industry in Nigeria?
Thank you very much. I mean, that is a very interesting question, and that drives home to one of the most important things that the government has been trying to do over the last couple of years in terms of diversifying our economy away from just oil and gas. So, yes and no, right? The oil and gas industry is still very large, very strong. Globally, we're seeing some signs of it recovering. Oil and gas is still, going to be there. But in terms of, the telecoms industry and the amazing growth that you alluded to just now over the last couple of years, we really see a trend that says that potentially telecommunications is one of our most important industries for the future. There are a couple of indicators that show that this growth is not about to abate anytime soon. First of all, we're going to see an increase in subscribers of about, say, 30 million over the next, say, 3 to 4 years, almost about 30 million. There's this shift from rural to urban in terms of our population dynamics that is really, really important, because there are statistics that show that as people join urban communities, they look to connect, right? They look for jobs, they look for information, they look to make decisions faster, and telecommunications allows this. There's a high youth population. This is one of the most important things. Because globally, Nigeria will have the largest working population by, say, 2030. And this really creates a pool of people who need to connect, who need to make use of certain kinds of services, more data. These are the kinds of things that are contributing to that notion that potentially we might have reached that inflection point where, yes, telecoms hasn't overtaken oil and gas, but potentially in the next, say, 5 to 10 years, it really can.
Yes, in the next 5 to 10 years, it could contribute more. But let's talk about the GDP, its contribution to GDP that at the moment is at 9% in the first quarter of 2017. Now, how can that sector improve more in contribution to the GDP? Because I know, yeah, they've been able to create more employment in the country and some other things, but how can we get more from that sector?
Okay, this sector is doing a lot already. They're one of the largest employers. there's a lot that they've done to improve, not just directly in terms of monetary value, but even connecting businesses. The kind of things that get enabled because of our telecommunications infrastructure are unquantifiable, and this is seen in much more mature markets around the world, right? The more connected you are, it's called IGDP, right? The more connected you are, the faster SMEs grow. They actually grow twice as much the more connected you are across the world. Now, how do they get better? Well, the industry is facing quite a lot of issues and threats that potentially are slowing them down. So I would say they can do more, but then I think that a bit of an enabling environment around them can actually help to spur them, to really empower our economy, right? Regulation sometimes has been amazing, with the fine and looking after the interests of the consumer. But sometimes, those can sort of hamper innovation or industries that are trying to accelerate. Infrastructure is still very expensive, so in terms of power, competition is getting fiercer. Consumers are also changing in terms of their appetite, right, for data, and this is really where I think that the telcos can do more. As the African or Nigerian consumer changes in the way they like to consume content, in the kinds of content that they want to consume, right? We need to build the technologies and infrastructure that meets that need, right? And as quickly as these trends are happening, right? We see Facebook, who's looking to connect 4 billion people who are not connected to the internet for the very first time across the world, and Nigeria is actually a big part of that. Now, we need that kind of innovation to really access some of that latent and hidden potential for the industry.
Yeah, you said something about building the technology that meets that need, and that takes me to fintech. That's financial technology. I see many Africans. Fintech seems to be transforming the banking industry in Africa. Let's just connect it with that now. Now, tell me, how can fintech, from telecoms, fintech, how could it transform banking in Africa? Very briefly.
Okay, so fintech is already transforming banking in Africa. We're seeing banks looking towards the startup ecosystem, the technology ecosystem for their innovation, right? It's a lot harder sometimes as a more established player with a bit of bureaucracy. It's hard sometimes to take risks and try to change things from how they've always been. And startups can do this very easily. So we have a couple of leaders right now, especially in Nigeria, who are, being accelerated by foreign investment, which you were talking about before. Coincidentally, at least 30% of foreign investment in fintech actually went to Africa. So Africa and fintech are hot right now. So in terms of how do startups really accelerate what's happening in banking? Well, there's a lot of inefficiencies, right? There's a lot of things that people want to do with their money, right? Yes, Access Bank and GT Bank and Wema Bank and all these guys have done a lot so far in terms of building online tools, amazing apps that connect us faster to the activities that we want to do. But then there's certain innovations that organizations like, say, Pay with Capture or Flutterwave or even mobile money providers like Paga can bring to the table, and that's already happening right now.
Oluseyi, unfortunately, we don't have enough time to talk more about it. I'm very sure we could get you back, especially to talk more about this fintech and its effect on the Nigerian economy and, of course, Africa at large. Thank you for your time, telecommunications expert Oluseyi Eshoyode Johnson. Thank you. Well, crude oil prices are down in the global market as OPEC members wait to see the implementation of last week's framework on production cuts. At the London market, the Brent trades for $51 a barrel. Now, the OPEC basket brand trades downward at $49 per barrel. Well, thank you for watching Business Nigeria today. It was an insightful one. We do hope you join us again sometime tomorrow. I'll leave you with the figures of the exchange rate as it stands at the moment.